Hello and welcome. In this short video, I'm going to talk about trading during sideways movement. Now, this particular chart is the DAX. The DAX, of course, is the German index of the 50 largest companies in Germany by market capitalization. But it really doesn't matter what the instrument might be. You could be trading currency pairs, you could be trading commodities like gold or oil, or shares. All these trading charts have similar patterns, and in reality at any one time these charts are really doing one of three things. They're either going up in value, down in value, or what we call going from left to right or sideways direction. So let me illustrate and to show you some good examples of upward movement. Here, of course, is a good example of upward movement. Here's an example of falling values, where the index is losing value. And of course, the other thing which it does from time to time is it does neither. It sort of goes left to right, which means we get this sideways movement. And this happens more often than not. Now, if we had such a thing as an ideal time to trade, then this on the left would be ideal, and this on the right would be ideal. And the reason that would be ideal is because when trading, we're only doing one of two things, which means we're either buying the instrument, in this case it's the DAX, or we're selling the index. The instrument. And we sell when the values are falling and we go short. That's the expression. We open a short position and we open a sell trade. If the market is rising in value, we open a buy trade or a long position. And really what we're doing is we're using historic data to predict the probability of a profitable trade. So if, for example, if you're trading here and you're looking to open a trade, logically, you're going to assume that this upward trend is probably going to continue, and therefore you're probably going to open a long position. You're going to buy the DAX. Equally, if you're trading at this particular time, especially because we're looking at the 1 hour time frames, each of these candlesticks represents a 1 hour time frame, which means that the index is losing value. You're probably going to open a short position and you're going to open a sell trade. And most of the time you're probably going to be correct and you're probably going to make a profit. What causes a problem is the fact that at any one time, even on this particular candlestick here, for example, during that 1 hour time frame, the DAX hits a low point of this. In fact, I can draw a line here. It hits a low point. Oh, I can't actually, not that I can do it this way. Give me 2 seconds. It hits a low point just there, and it hits a high point just there, of course. Oh, sorry, just a bit higher than that. And what tends to happen is anyone trading during that particular time frame, well, even though the indications are that the market is falling, once it starts to reverse, traders become very nervous, close positions, and close a position that potentially would be profitable, but they close it at a loss. And that's the problem when emotions come into trading. And we try to keep our emotions out of this business because we need to use historic data to predict profitable trades, and we need to be correct most of the time. The question, of course, is if you were trading at this particular time, this particular time here, what would you do? Would you open a buy trade or would you open a sell trade? Well, I think 50% of people would probably open a buy trade in the expectation that the market is rising in value, and 50% would open a sell trade thinking it's falling in value, and 50% of people would probably make a profit, but the other 50% would probably close too early and probably make a loss. Therefore, it's fair to assume that trading during sideways movement is not ideal, and some traders even suggest it's best to avoid trading when we've got sideways movement. But of course, trading the market is often going sideways, and we can't always wait for perfect trading conditions. And that's another reason why many members of the Global Wealth Academy choose to register for our robotic copy trading service, because that particular period of time from when this candlestick opened here to when this one opened here is 15 hours, because each of these candlesticks represents 1 hour, and there are 15 of them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 of them. So for 15 hours, you're in a position of not knowing whether to buy or whether to sell. And the reality is most people haven't got the time or the patience or the know-how, and they often prefer to register for our robotic service because they will have our trades traded on their live account automatically every time we place a trade on our live account. So that's something for another video, of course. So what I want to do is just show you today, and today's a good example of another sideways movement. So that candlestick there that I'm just drawing this line through is when the market opened at 8 o'clock this morning. The DAX opens at 8 o'clock UK time and closes at 10 o'clock. Sorry, I'll repeat myself. The DAX opens at 8 o'clock European time, which is 7 o'clock UK time, and it closes at 10 o'clock European time, which is 9 o'clock UK time. That means that we can trade the DAX 14 hours a day, 5 days a week. But you can see for 14 hours today, for much of that time, the DAX was going sideways again. I'll draw those lines again. You can see that it was bouncing from this low point to this high point somewhere there. And we call this lower point the support level, and we call this upper point the resistance level. And typically what happens is it rises to the rises to the resistance level, bounces off there, comes and hits the support level and bounces off there and goes back up again and comes back down again. And it did this for 15, well in fact it did it for most of today. And in this example it did it for 15 hours. So what do we do during these times of sideways movement, and is it possible to make a profit? Well, in this video I'm going to show you an example of one of our members who subscribed to our robotic copy trading service, because today we actually had, if I can get this right, 10 trades today, and of those 10 trades 9 of them were profitable. And I'm actually looking in the back office of our robotic software, because all our members who register for this robotic copy trading service have access to their back office, so they can see every trade that was placed on their account. And from their point of view, they don't have to manage their account, they don't have to supervise, it doesn't require any technical know-how or any skill, and that's why more and more of our members are choosing to upgrade to this robotic copy trading service. Now the first trade today is this pink one here. This, as you can see, was the 29th of July, and this was a trade which I opened late yesterday afternoon sometime. And in fact I normally close trades before the closing time at 10 o'clock, and we don't recommend under normal circumstances having trades open overnight because of the risk element. But I believe that this trade was going to turn profitable, and in fact I closed it for a small loss of just 65 cents. And whenever we leave a trade open overnight, we also have what we call a swap fee. And the swap fee for this particular trade was just €1.13. Now all these 10 trades today were for just one lot, and we typically place a trade for our members of one lot for every 1,000. Now this particular member has over 3,000 in his account, but he has requested that we trade his account with one lot for every 3,000 as opposed to one lot for every 1,000. And he could have been making a lot more money than this, but that was his request. So let me just show you. I'm going to get a calculator here. Let me just get you a calculator and let's see, for example, what profit this particular trader, this particular member made today. The last trade today, as you can see, is this one here, which is $2.99. The one prior to that was a profit of $4.90, so we add $4.90. Then we've got $2.90, so that's plus $2.90, plus $9.19, plus $5.90, plus €7.40, plus $6.65, plus $1.95, plus $18.34, and then we had the first trade this morning, which was 65 cents. So this particular member made a net profit of €59.57. And the reason I say net profit is because some of our members have to pay commission fees and some don't. And that all depends with our broker, because we work with a regulated broker, and the broker offers an incentive for people to open what they call a VIP account. Now a VIP account is for anyone who registers a minimum of €3,000 on their account, or deposits a minimum of €3,000. It can be €3,000, it can be £3,000, for example, and or it could be $3,000. But it has to be a minimum of 3,000 deposited to qualify for a VIP account. And what that means is that the client will not be subject to any commission fees. As you can see, for each of these trades, it shows the commission fee, which was zero, commission zero, commission zero. Now, if this was a standard account, meaning that the client had deposited less than 3,000 in their account, as a single payment that is, then they would be paying commissions on these trades. And the commission on trading the DAX for every lot, and you can see these trades are all for one lot, is around about €1.50. So therefore there are 10 trades. So if we multiply 150 by 10, it means that this client would have paid about €15 in broker fees had they have had a standard account, let's say with 1,000 deposit. And in that case, they wouldn't have made 59.57, they would have made about 44.57. But 44.57 on a standard account with only €1,000 deposited still represents a capital growth of 4.4% on a day's trading. Now, of course, there are days when we lose capital, there are days when we make capital, and this is a high risk strategy. It's not suitable for everyone, but I can tell you that 80%, more than 80% of our trades are typically profitable. And it's absolutely ideal for those people who want to receive passive income without any managing of their account, without any technical know-how, and it's completely passive. Now, for this particular client, as I say, who has a VIP account and therefore is paying no commission fees, they've got just over 3,000 deposited. They made 59.57, which means they've made around about 2%. So they would have made about 6% today, but they made about 2% because instead of trading lots of 3 lots per trade, they've only been trading trades with 1 lot per trade. Now, for those clients who've got 10,000, they have trades of 10 lots, and we can trade up to 50 lots per trade, and we can even have up to 10 trades open at any one time. So the sky's the limit. But if you'd like to know more about receiving these levels of passive income, you'd like to know more about trading the DAX and the Dow, then subscribe to the channel if you're watching this on YouTube to receive notification when we upload more videos. And also below this video in the description, you'll be able to click and join our private Facebook group to learn all about trading these markets. And we also offer a 14-day trial where you can test out our systems, get to know how this all can work for you, and we offer a 14-day trial for just €10. So as I say, it is a high-risk strategy. It's not suitable for everyone, but all we're simply doing is putting the law of probability in our favour so that for most of the time we expect to make a profit. If that sounds interesting, do make contact. Thanks for watching this short video, and I'll speak to you in due course and look forward to speaking to you on the next video. Have a great day. I'll speak to you soon.